Welcome to the Capital Spreads Weekly Update. Today is Wednesday, the 17th of August 2011, and the week so far, well, again, it's been a very volatile week, and we seem to be living through quite a volatile period at the moment. This creates both substantial opportunity as well as great risk for clients and their positions. It also means that it's very difficult to hold on to positions, and you either need very deep pockets or be very brave and wait for the market to come back in your favour. It really is a case of blink one moment you're 100 points on side, blink another moment and you might be 100 points offside. However, the last few weeks or so, a key theme has emerged, and that is that the downside risk to the global economy has increased substantially. There seem to be a number of key factors at the moment that seem to be acting together that could possibly create a perfect storm that could lead to another 2009 type credit crisis situation. The first is the fact that the Eurozone debt crisis seems to be far from over at the moment, and there seems to be no clear resolution as to what can be done to resolve the situation. The second is the fact that there seems to be some overall slowing down in many of the key global economies, and if that does happen, then there's a worry as to what else can be done in order to stimulate the global economy going forward. Germany, for example, came out with a GDP figure of 0.1% yesterday. Many people were expecting an increase of 0.6%. Now, Germany is one of the driving engines of the Eurozone area, so any slowdown in Germany will be felt far greatly in the rest of the Eurozone countries. We also had the UK unemployment figures come out earlier today, which showed an unexpected increase of 7.9%. Many people were actually expecting it to remain at 7.7%. Again, what that actually means is that we could actually see some possible further quantitative easing in order to stimulate the UK economy. Not only that, many people are wondering as to whether we might actually go back into a recession or not. So looking at the situation as we currently stand, the FTSE is trading around 53.40. It's down about 15 points in the day. It has been moving in line with the other major index markets like the US Dow, for example, as well as the German DAX. We had a sharp sell-off of the last week or so and had a sharp rebound since. However, we are far below the recent highs. We have also broken the long-term trend that was established back from March 2009, which was the peak of the credit crisis, and I have a chart to show you what I mean regarding this. As can be seen, the FTSE had been trending upwards since the low of March 2009, having dipped several times since. However, recently we've broken far below that, and it certainly looks like the trend could be changing from here going forward. The euro has also become very topical at the moment and seems to be driven quite largely by political moves and political news at the moment. We're currently trading in a range of between 140.00 and 146.00. Many people were watching the German Chancellor and the French President and their meeting yesterday in terms of what they could do to help ease and resolve the Eurozone situation. Unfortunately, they've not come out with anything substantial which the market believes will help resolve the situation, and as a result, the Eurodollar seems to be quite volatile at the moment, with many people uncertain as to where we will go from here. However, of interest is also the fact that two of the countries that had recently been used as a safe haven, the Swiss franc as well as the Aussie dollar, have rebounded for their recent strength levels. Now, this has partly been off the back of intervention by the banks in those respective countries, and also the belief that we might actually be through the worst. However, we are far from the worst at the moment, in my opinion. Gold also seems to continue its upward meteoric rise almost unchecked. It's currently trading around 1790, hitting a high of 1815 recently. Now, many people are forecasting that this could now easily go to $2,000, and given the moves that we've had over the last few weeks or so, that certainly seems possible. Just to give you some perspective on gold, gold had a previous rally back in the late 1970s to the early 1980s, where inflation adjusted, it hit a high of about $2,400. So it certainly shows the current rally could have some further moves on the upside before we hit any sort of plateau. At the moment, as it currently stands, you're looking at support around 1740, and then possibly even down to around 1640 before gold finds any strong support. On the upside, you're looking at a target of around 1815, and then, as I mentioned, by the end of the year you could possibly see it hit even 2000 if we keep going with the momentum we are at the moment. In terms of the week going forward, will be largely dominated by both political news as well as some key economic figures. For example, we did have the key Eurozone members meet yesterday to try and resolve and give some resolution to the debt crisis. Other than that, looking at economic figures, you've got, for example, the UK retail sales come out tomorrow, a key driver of the UK economy. Later on, we've also got the US CPI figure coming out tomorrow, and later on next week we've got the German IFO and the ZU figures. Now, given the fact that the German economy showed a sharp shrinkage, it will certainly mean that these figures will be closely watched. In terms of client activity, many of our clients seem to have faded the moves we've had recently, so they've bought into the falls we've had in, for example, the indices, the Dow, the S&P, the DAX and the FTSE. They continue to hold long positions in gold, positions they've had for years now, and believe that it will go higher from here. And finally, they actually sold into the recent rally up we've had in Eurodollar, believing that the move's been overdone and we could possibly see a reversal. In terms of the theme of the week, I would say the theme of the week seems to be the continuing uncertainty in the financial markets and the fact that there doesn't seem to be any clear resolution in terms of where we go from here. Many people are now forecasting we could even have another recession before things start to stabilise. It's very much up in the air, and many people will not place any long-term bets in terms of which way the market will go. That's it for now. As usual, if you have any feedback, it's media@capitalspreads.com.